The best mutual funds for 2022. Mutual funds are still one of the finest methods to grow wealth and achieve financial goals. And if you're looking for funds to invest in, mutual funds are a great place to start. In today's video, we'll be listing down the top 8 mutual funds that you should have in 2022. Number 1. Voya Russell Large Cap Index Portfolio Class 1. The Voya Russell Large Cap Index Portfolio Class 1, or NASDAQ, IIRLX, is a mutual fund based in Arizona that invests at least 80% of its net assets in Russell Top 200 Index equities. The fund mainly invests in equities, convertible securities, and other derivatives that are linked to the index. With a holding turnover of 6%, Voya Russell Large Cap Index Portfolio Class manages more than $1.27 billion in net assets, with a cost ratio of 0.36%. Microsoft Corporation on NASDAQ. MSFT, a Washington-based computer powerhouse, is one of the top positions in the Voya Russell Large Cap Index Portfolio Class 1. Fisher Asset Management, a Washington-based investment firm, is a major shareholder in Washington Corporation, NASDAQ MSFT, with 25 million shares worth more than $7 billion, according to Insider Monkey. Microsoft Corporation, NASDAQ MSFT, like JP Morgan Chase & Co., NASDAQ JPM, Citigroup Inc., NYSEC, and ExxonMobil Corporation NYSE Exxon, is a company on the radar of elite investors. With all these numbers in mind, you're sure that your funds are secured by including Voya Russell Large Cap Index Portfolio Class 1 in your funds list. Number 2. Mirae Asset Tax Saver Fund Direct Plan. The Mirae Asset Tax Saver Fund Direct Plan is one of the best performing equities mutual funds with a low cost ratio and a tax benefit that's currently available. Given the small minimum investment requirement of INR 500 and the option to invest via the systematic investment approach, it is extremely accessible to invest in SIP. With a 3-year lock-in period, this is an open-ended fund in the Equity-Linked Savings Scheme, or ELSS category. Open-ended funds are mutual funds that have the ability to issue and redeem shares at any time and are priced daily based on their net asset value at the conclusion of the trading day. The fund's portfolio includes some of the largest stocks in the finance and technology sector by market capitalization. We included Mirae Asset Tax Saver Fund's Direct Plan on our list because of its strong performance against its benchmark index, the S&P BSE 500 TRI, as well as superior returns over its peers over 3 and 5 years. The 3-year alpha of 5% is good, the beta of 1% and standard deviation of around 22% are average, and the Sharpe ratio of about 1% is good. But before we continue, go ahead and click the subscribe and like buttons. It takes a lot to make these videos. Your small actions tell YouTube to keep promoting our videos. Also, tell us in the comment section which mutual fund suits you the best. Thanks. Now back to the video. Number 3. Quant Active Fund Direct Plan. Because of its strong alpha and the low expense ratio, the Quant Active Fund Direct Plan is one of the top multi-cap funds. It allows investors to invest in the fund using a systematic investment plan, or SIP. One of the benefits of its open-ended mutual fund is that it has no lock-in period. The fund invests in companies in a variety of industries, including financial services, fast-moving consumer goods, or FMCG, metals, and construction. The mutual fund's expense ratio is at 0.58% with a 3-year performance of 34.44%. Looking at the fund's 3 and 5-year returns, it outperformed its benchmark index, the S&P BSE 500 TRI, by a considerable margin. Its alpha returns are among the greatest among peers, and its beta and standard deviation are both lower than other funds in the category. As of February 28, 2022, making it a solid pick for anyone looking to invest in companies across numerous market capitalizations and fund types. Number 4. Mirae Asset Emerging Blue Chip Fund Direct Plan. The Mirae Asset Emerging Blue Chip Fund Direct Plan is the best performing large and mid-cap fund among peers. With the lowest expense ratio of 0.68%, investors can also invest in the fund using a systematic investment plan, or SIP. Just like the Quant Active Fund, the Mirae Asset Emerging Blue Chip Fund has no lock-in period. The fund invests in the best financial stocks in the country, as well as assets in the technology, healthcare, and automobiles. Looking at the returns over 3, 5, and 7 years, the Mirae Asset Emerging Blue Chip Fund surpassed its benchmark index, the S&P BSE Large Mid Cap TRI, by a large margin. Its alpha of 6% is the highest among peers. except for the Axis Growth Opportunities Fund, which is a newcomer to the market and thus cannot be compared to others. Its beta of nearly 1% is not awful given its remarkable returns, and its standard deviation of 21.8% is lower than peers. Its Sharpe ratio is about 1%, and that's also remarkable. Number 5. Canara Robeco Emerging Equities Fund Direct Plan. After the Mirae Asset Emerging Blue Chip Fund Direct Plan, the Canara Robeco Emerging Equities Fund Direct Plan is the second best fund in the large and mid-cap category. This fund also offers a low expense ratio, which makes it appealing to investors. SIP investments are also available to investors. This fund invests in large and mid-cap equities in the financial sector, as well as other sectors such as technology and healthcare. Looking at the Canara Robeco Emerging Equities Fund's 3-year and 5-year returns, it easily outperformed its benchmark index, the S&P BSE Large Mid Cap TRI. It has a good alpha of 4.6%. Investors were able to generate strong risk-adjusted returns because of its beta of 0.95% and standard deviation of 21.4%. Its Sharpe ratio of 0.96% might be greater if it wants to be the best-performing large and mid-cap equity mutual fund. Number 6. Hartford Core Equity Fund Class R5. The Hartford Core Equity Fund Class R5, or NASDAQ HGITX, is a mutual fund located in Connecticut that invests at least 80% of the net assets in common equities. The fund can also invest in stocks with a wide variety of market capitalizations. The Hartford Core Equity Fund Class R5 manages about $11.8 billion in net assets and has a 22% holdings turnover. The fund's cost ratio is 0.48%. Apple Inc. NASDAQ AAPL, a California-based technology company, is one of the top holdings of Hartford Core Equity Fund Class R5, NASDAQ HGITX. Insider Monkey's database showed 120 hedge funds with $146 billion in Apple Inc. Positions at the end of the third quarter of 2021. Number 7. Fidelity NASDAQ Composite Index Fund. The Fidelity NASDAQ Composite Index Fund, NASDAQ FNC MX, is another mutual fund that you might want to consider if you want to build your financial stability. This mutual fund was established in Boston. It invests at least 80% of its net assets in NASDAQ-listed firms. To generate income, the fund also lends securities. The Fidelity NASDAQ Composite Index Fund manages about $14.2 billion in net assets and has a 17% holdings turnover with a fund's cost ratio of 0.29%. Comcast Corporation, NASDAQ CMCSA, a media and technology company, is one of the top holdings of the Fidelity NASDAQ Composite Index Fund. Eagle Capital Management, a New York-based hedge fund, is a major shareholder in Comcast Corporation. With 29 million shares worth more than $1.6 billion, those are pretty huge numbers, aren't they? Number 8. SHELTON NASDAQ 100 Index Direct NASDX. This fund aims to watch the NASDAQ 100 index's performance. Its performance in 2022 was 9%, and its annual performance over a 5-year period was 22.5%, with a 0.50% expense ratio. Sheldon Capital Management NASDAQ 100 Index Fund Direct Shares is a mutual fund based in California, and it invests at least 80% of its net assets in NASDAQ 100 index equities. According to their market capitalization, the index covers 100 non-financial companies listed on the NASDAQ market. Sheldon Capital Management NASDAQ 100 Index Fund Direct Shares, NASDAQ NASDX, manages about $1.31 billion in net assets and has a 12% holdings turnover.